The key to trading success is emotional discipline. If intelligence were the key, there would be a lot of more people making money trading, says Victor Sperandio. What is going on, ladies and gentlemen? Welcome back to another little bit different but more educational episode than usually. And why is that? Because I'm here to bring you a value on any sort of way when it comes to cryptocurrency trading. Because it is risky to trade and invest in this market, and these tips will help you staying alive in it even when everything is bleeding and going to hell. Especially if you are a beginner in crypto, then you really need to hear me out. If you like this video, please make sure you hit that like and subscribe button at the end of it. Thank you very much for that. So enough chit chatting and let's start learning. Common mistakes in those traders are actually overtrading, trading impulsively, revenge trading, missing trade after trade, hesitating, chasing the market, entering late, taking premature profits, moving stops too close to the market or too far away from the market and breaking those rules. Do any of these sound familiar to you? If you do these type of things, let us know down in the comment section down below so we can discuss about it. So first tip, recognize fear versus greed. Fear and greed are the two most common emotions that traders experience, and they are going to lead you to lose your money. Fear is often caused by trading with too much money. So if you're trading with too much money, from fear to lose it, you are probably going to make a bad decision and for real lose your money actually. Fear is happening also when you take a trade with a little conviction. So you know that you are in the wrong trade, but you're unsure how to escape from it. Fear is what makes us sell our winner traders too early and hold our loser trades too long. Now, as it comes to greed, a certain amount of greed is necessary because we needed to make speculators want to trade in the first place, right? The bad side of the greed is that it makes traders to chase the market, or FOMO, you probably heard about FOMO, into bad positions. An example is buying after a large sudden move higher when the market is already overbought and demand is decreased. And what usually happens, price starts to drop and you are missing your exit or even scared to exit because it may go further up, and that's how you are losing your pretty much winning trade. So how do we fight the pitfalls of trading with too much emotion? Now let's break this down and help you to overcome them. First one is failing to plan is planning to fail. Develop a system or a plan, call it whatever you want, and stick to it.
Infiltrate the dealers, find the supply.
For example, have a specific criteria for entering and exiting trades. Always trade by your plan.
We get to be brothers? Infiltrate the dealers, find the supply.
Have your entry, stop loss, and take profit levels mapped out in advance. Don't change them once you are in a trade. When you are coming into trade, it is very important to be patient and wait for your entry. Entering in the overbought market will probably cause you losing it because you didn't follow your plan. So make sure you have entry plan and be patient until situation approve your entry. Do not execute without following your plan.
What if we find the supplier first? We don't have to worry about the dealer.
God damn. Infiltrate the dealers, find the supply.
Second, what you could do actually is write down your rules. Do nothing unless every rule is satisfied. It's much better to trade less time smarter and be profitable than to execute a bunch of trades that will cause you lose money and burn you out and eventually make you leaving the market, right? Do not let that happen to you. Revenge trades as I'm gonna win it this time will not make you profitable trader. It's okay not to be right. Every professional trader was not right always. Of course they have losses, but the goal is to be profitable, not right. Remember that. Now, second one, treat trading like a business. If you want to trade full-time, then you need to approach trading like a business. Create a business plan and edit and update it monthly. Keep a trade journal and study your past mistakes. That's very important. Have specific rules for taking profit to pay your bills and cover expenses. If you are already covered with this by living to your parents, then even better for you. You can focus more on trading, right? Set achievable goals and execute daily activities like studying markets, reading financial news, paper trading, and so on. So to keep your emotions, at peace. You will be less likely to force trades out of a boredom or because you feel internal pressure, to be productive. Without a plan, you're likely to wake up each morning and force bad trades with no real direction. So being productive means also studying markets and learning everything about this specific job. Third one, never watch the portfolio. The only number that matters is the number at the end of the game. So avoid checking your portfolio or trade status repeatedly. Set it and forget it. The more often you check to see how your trade is doing, the more likely you are to make the emotional decision to either exit too early or move your stop loss. This also applies to long-term investors, swing traders, and everyone who is trading on a mid or a long-term position. I know from my experience how overwhelming it is to check portfolio non-stop and frustrate myself over nothing. So I just stopped doing it, and I became more focused on real things like study markets and reading about them. Now this does not apply to watch portfolio at all, but once a week is totally enough to see where your investment is going if you're a little bit position trader or a swing trader. As a fourth, knowing when to trade. Staying away from some market conditions is prudent. So the crypto market, and more specifically the altcoin market, especially those, is rarely tradable. So wait for the right moment to execute. Only trade when you are in the proper mindset. Don't look to the market to make you feel better. If you aren't up to trading, the simple solution may just be to step away from it. Sometimes you should, trade at all. You shouldn't trade at all. So just because if your entry is not following your plan, if market is raging at the moment, if momentum is happening and you want to FOMO in, just wait. See where it's going. Wait until storm comes down. Where is the support? Where could be the bounce? Where are all indicators? What trend is market in? So just think before a move, or don't move at all. Fifth, trade with the proper size. Nothing causes more fear than trading with too much money. Start small and scale up as your portfolio and comfort level grow with the market. Scale in and out of position to minimize the emotional drain from exiting too early or too soon. This is very important. So I'm going to bring something that we are going to have on this channel at the end of this video that could actually help you in a long run. So just stick to the end, please. And finally, the last one, have a life outside of trading. So spend time with your family and friends, go to the gym regularly, eat healthy food, turn off your phone, and don't check your portfolio non-stop. Keep specific trading hours and do not trade during your free hours. Nobody can trade 24/7. It causes mental tiredness and bad decisions. Get a life, please. So there are numerous steps and techniques that a trader can use to eliminate emotions from their decision making. Find what works for you and stick with it, whatever that is. So if it is a gym, playing video games, taking a walk, swimming, whatever. Control your feelings and become a successful and profitable trader. I will probably cover this topic more in some other videos, what could help you to remove emotions from the market and trade as a real trader. One of those ideas is that I want to apply on this channel is once we get enough people and subscribers on this channel, once we build up CryptoWealthy community, right? I'm going to probably deposit like $50 to some exchange every month and do with you guys one trade per video and watch the results and end of the trades every other video. So in that case, you're going to learn together with me what is good, what is not. You're going to get used to see small amount of position in videos, losses, gains, whatever, and learn how to use it to you and learn to trade first with small positions. We could also discuss about your opinion, what could trade look like. Maybe give me some advices if you're more experienced than me, and so on. So we will discuss about that when the time comes, and until the time comes, trade safe and bye bye.